is waiting for Bitcoin to crash lower. Twitter is screaming for decay. Analysts are calling for a macro collapse. But what if I told you that the bottom is already in and smart money is quietly accumulating while retail waits in fear? So in this video, I will show you the data that historically only appears at major Bitcoin bottoms and why missing this moment could cost you the entire next bull run. As we can see on this chart, Bitcoin has corrected by more than 50% from its previous peak in October, and we can clearly see that we reached over $126,000 in October. From there, we entered a serious downtrend. And because Bitcoin dominates more than 50% of the entire crypto market, it is pulling the entire crypto market down with it. So the total crypto market cap peaked above $4 trillion in October and is now just above $2 trillion. That's almost $2 trillion wiped away from the market. Why did we enter this downtrend? And why did Bitcoin and the entire crypto market crash so sharply? It's important for you to understand that because we see those patterns in every other bull run and in every other bull market. The main trigger, as we all know, you've probably been around at this time, came on October the 10th, when we saw the largest crypto liquidations in 24 hours. That was over $19 billion. As you can see on this chart, we were just sitting at $4.1 trillion market cap, and then suddenly we crashed to the bottom here, where the liquidation started. And this happened after President Donald Trump announced 100% tariffs on Chinese goods entering the US, after China announced tariffs on rare earth elements used in weapons, advanced technologies, circuit boards, and satellites. But this never happened. It was never implemented, the 100% tariffs, but this triggered huge liquidations in the space. Now, the crypto market is a high-risk asset class. It is extremely liquid. It trades 24/7. And when there is macro uncertainty or geopolitical conflict, crypto is usually the first place investors pull money from because it is highly volatile and we can see huge drops and increases in only hours. From there, as you can see on this next chart, we entered a serious downtrend. At the end of October, we tried to break above 116,000 again, but we failed to do so. And this is where a lot of us were hoping for another top and 130k level, but we failed to do that. And from November until today, we have corrected by around 52-53%. What we had to follow at that time, and what was the biggest signal that a lot of people missed? One of the strongest signals, and remember that because it will help you for future analysis. The biggest signal that we entered a bear market was when Bitcoin closed below the 50-week exponential moving average, the so-called EMA, as you can see on this chart. This is the weekly Bitcoin chart that we've got here, and each candle represents 1 week of trading. The green line you see, this is the exponential moving average, or so-called EMA, which shows the average price over the last period, 50 weeks in our case, because we have the 50 EMA. And this line is important because it is used to determine whether buyers or sellers dominate the market. When the price is above it, buyers dominate, and that means the trend is bullish. When price is below it, sellers dominate and the trend is bearish. So from September 18th, 2023, Bitcoin was above the 50-week EMA and kept rising. Every correction bounced off it until November the 10th, when we closed below it. And that was the biggest signal for me that the bear market had started. That's back in 2023 at that time. Now, if we compare the 50-week, 100-week, and 200-week EMAs, the 50-week EMA is actually the first shield, and it represents the average price over 1 year. If Bitcoin breaks below it, the overall trend is changing. The next line you've got is the 100-week EMA, which shows the average price over the last 2 years. If we fail to reclaim the 50-week EMA after breaking below the 100-week EMA, it means the market structure is completely changing and the price is likely to go even lower. Now, the 200-week EMA, that represents the average price roughly over 46 months. If we break below it, it usually means a serious structural shift, not just a correction, but a very major bear market. And I'll show you now why this model works and why the exponential moving averages are so powerful. If we go back to 2020-2022 bull market, Bitcoin broke above all weekly EMAs, entered a strong uptrend, made a peak, corrected, perfectly touched the 50-week EMA as you can see on the chart, bounced and made a second peak, and when we closed below it in March-May period, the bear market started at that time. Then we fell below the 100-week EMA and finally the 200-week EMA. Very simple but very powerful analysis. And the same pattern happened in the 2016-2018 bull market and even the 2012 and 2014 bull market. We can briefly see that on the chart. So this pattern is repeating again now. Beyond the euphoria, beyond the liquidations, beyond the macro uncertainty, inflation, weak labor markets, US debt risks, this was one of the main indicators that we had. And of course, this is not financial advice. Crypto is extremely volatile and risky. But these indicators, what they do and why I want to teach you those is because it helps us navigate the market much better and prepare for what is coming up. That's one, the EMAs. Another major factor which was telling us we are entering this trend is the halving cycle. If we look at this chart, this compares Bitcoin's price movements after each halving. The yellow line is April 2024. The orange is May 2020, and the previous cycles are July 2016 and November 2012, as you can see here. Every 4 years, the mining rewards is cut in half, reducing new supply. Historically, what does do? It leads to similar cycle. After the halving, the market rises gradually, reaches a bull peak, then enters a deep correction and bear market until the next halving event. Historically, the peak occurs around October, November, and major corrections start around February and March. And this is also aligned with my strategy in my previous video that I made on Donald Trump's playbook, crypto market playbook of 2026, how I think this year would look like. And what I'm explaining here is kind of aligned with the economic and political picture that is described in that video. It's a very good one. Make sure that you watch it and comment below. Institutional selling also contributed to all of that. Since the start of the year, ETFs have sold more than 4 billion worth of Bitcoin. When investors redeem ETF shares, funds must sell Bitcoin, adding additional downward pressure. Another key thing in the market is watching closely a historic 15-year rule. The previous cycle's all-time high monthly close has always acted as long-term support in the next cycle. For the 2020-2022 cycle, that level was around $61,000. We have dipped below it, but we haven't closed below it on a monthly chart yet. So if we do it, it will be the first time in history, in Bitcoin's history, that this rule is actually broken, and this is something that we probably need to be a little bit worried about if we reach there. But so far we haven't, and we'll keep monitoring that. So these are some of the signals for why we entered a bear market and why price dropped so much, more than 50% just in 2 months' time. On the other side, I want to share with you the bottom signals that I currently see. Almost 9 million Bitcoin are currently held at a loss, around 45% of the circulating supply, basically. Historically, and you know, even Michael Saylor was in a position, maybe right now he's in profit, but he reached a loss of like $7 or $6 billion at that point when Bitcoin dropped in the low 60s. Historically, we have such levels that signal market bottoms because selling pressure eventually dries up. There is nobody to sell there, and smart money keeps accumulating. We see Binance buying, we see Michael Saylor and Strategy keep buying, and we see exchanges starting to buy, but I'll show you another chart shortly. The fear and greed index, that's another indicator, is in extreme fear, and it reached 5 as indication, which is the worst ever recorded since this indicator exists. That's another signal, and historically extreme fear has been a strong long-term accumulation zone and a potential bottom signal, especially the record level that we reached so far with this drop. Then long-term holders and whales are accumulating again. Wallets holding over 1,000 Bitcoin have increased their balances since the start of 2026, and we can see that on this chart. Big holders, big whales, big players are accumulating. They are not waiting, and we can see that on the chart. So if you understand if you've been around for a couple of cycles, this would all make sense to you. But if you're new to the space, I want to tell you that when fear is highest, this is the biggest long-term opportunities. This is the time where those opportunities usually appear. You just need to remember the crypto market is extremely volatile and risky. So always be careful and always make truly informed decisions. So we have the bottom signals here. We might drop further to the downside. And one rule that I teach people in my Discord, on my course, is never go all in. Always make sure that you have some cash on the side because the market can surprise you us. We can go even lower. I personally think that the fourth quarter of 2026 will be bullish because that also aligns with the election. And if you go and check out my playbook video about Trump and how the market would pan out in 2026, I'm explaining why Q4 of 2026 would be very bullish. Just in short, it aligns with the midterm elections, and that's the easiest way to have an impact on the human psychology when people are seeing their assets having increased value and when they're having more cash. So something very positive is coming in mid 2026 towards the end. The start might be a little bit ups and downs, a little bit volatile, but I think the end will be pretty good for us. Anyway, that's from me today. Thanks so much for watching. I'll see you in the next video.